Good day, ladies and gentlemen. It's Eric Coffin. I'm here at the Metals Investor Forum, May 26, 2023. I'm having a conversation right now with Charles Funk. Charles is the CEO and founder, really, of Heliostar Metals, which is a company I've followed in the newsletter. Heliostar has a really, really nice project in Mexico called Ana Paula. They just started putting out drill results this week that were pretty spectacular. What I really like about what these guys are doing is they've taken a project that in the past was kind of open pit. It actually looked like a pretty decent project. I mean, the NPV was okay, but Charles and his team have chosen to focus on a really nice looking high grade panel. It's not very deep. It's got very good thickness, very good grade. People that haven't had as much time in the mining business as I have, I think they often overestimate things like underground mining costs. But if you've got the right geometry, underground mining can be very efficient, and it's something where you can a lot of the really high margin mines in the world are actually underground operations. You've just got to have the right geometry and the right grade, and you do, Charles. I mean, can you tell us about this one area on Ana Paula that you've chosen to be the focus to kind of re-engineer this whole thing from the get-go?
Yeah, it was that core that convinced us that we should own Ana Paula. It's today a 250 metre long, 100 metre tall and 60 metre wide. You're talking about the width zone of consistent mineralisation. If you take one of the holes that we press released this week, 53 metres at 11 grams is a great headline by itself. But I think maybe the hidden feature of it is there's 57 samples that make that up, and only one of them was less than 2 grams. If you talk about underground mining scenarios, that's incredible.
And it's like a breccia or something? I mean, what makes that panel that panel?
It's a big disseminated body of sulfide that's got great structure and great host rocks in the breccia at the same time. So lots of porosity, bring lots of gold and deposit it to make a very consistent zone.
Now, the previous operator took it all the way to a mining permit, actually. But even so, you're thinking, and the basis of the program you're doing now is that there are some holes in the resource. There's some blank spots. There's areas where you think you might be able to grow it. You still have some confidence with that, having a few holes into it now?
Yeah, those results were particularly validating. So a second hole, we drilled 44.5 metres at another 11 grams. It was a 30% improvement to what the model predicted.
Now, is that, when you say 30% improvement, is that grade times width? Or?
Correct.
Okay.
And so what we saw was there's zones that are well drilled and there's zones where there's gaps.
Right.
And all the drill holes are consistent. I talked about the consistency of the grade, but in these spaced gaps, the resource model was being conservative. It's a sensible and smart thing to do. Right. And we thought, well, if we can drill the same results as left and right, we can add ounces and grade. Right. And so it was very validating, that first hole. And I think that speaks to our target of lifting it over 1 million ounces of high grade.
Okay, so and where do you think you can go here in terms of like, is it down plunge, down dip, up dip? Where have you got room right now?
Yeah, at the risk of being Goldilocks, it's a bit of everything.
Right.
So internally, we think we can fill in these gaps and add ounces and add the grade, which is great. We think up plunge and down plunge, there's up to 50 metres in each direction for potentially a total of 350. And then some of that recent drilling, so we're 2 holes into a 20 to 24 hole program.
Right.
Even above the panel, there's some interesting results coming that look like they'll be mineable underground grades. So I think there's multiple areas that we can add ounces in the deposit.
And I mean, I didn't go into the weeds enough that I was like ripping apart the grade shell blocks in that model, but the way the previous resource was generated, because anybody that goes onto the website, which I highly recommend, it's a very well done website, very well done deck too. When you look at that long section and you see these blank spots, were those just non-issues with the previous resource, or are there a bunch of blocks in there where you've got 0 grade blocks that made up part of the resource, so that if you fill in almost anything, actually, you start bringing the grade up just because you had 0 assigned blocks before, and even if you got like 2 grams, it's 2 grams more than the previous model.
You're hitting on a really interesting question, because when you go down the open pit scenario, instead of the high grade core, the low grade becomes the focus.
Right.
And so all the focus was making sure the low grade pays for itself to get to the high grade. And so you're actually not really focused on the high grade, because even if you did, you might be accused of spreading that grade out. So a lot of previous focus on the low grade. And that meant that these gaps do exist in the high grade core from an underground scenario. And you're exactly right. Right now, we think there's lots of sort of 5 gram zones that we could lift up to 10 grams.
Mm-hmm.
Then when we do the work and the mine sequencing and decide our cutoff grade, there's going to be a whole heap of 1, 2, 3 gram material that we can lift up above the mining cutoff grade. So there's actually a whole sequence of work that we think, once the cutoff grade's set, we can focus on bringing ounces in that way that previously weren't that important in an open pit scenario, because you were just going to get to them.
Yeah, they're just coming out anyway.
They're very critical to have resolution on that for the underground and give us more mine life.
Okay. No, that sounds good. So in terms of the whole, the big picture game plan, you got a really good slide in your deck. And maybe for people that want to look at this, which they should, HSTR?
Correct, yep.
HSTR, maybe give us sort of the 3-minute version of what you had on this slide, where here's all the different things we're trying to do to affect the valuation of the project. Because you've got 4 or 5 different things that working in concert make a huge difference, but I know you got pretty high confidence on a lot of them, actually.
Yeah, so right now there's a PFS on an open pit that, as you said, has robust economics, but the bit that we didn't like was that it introduces technical risk in the milling scenario. They get a bit experimental in that sense, and there's lots of low grade before you get to the high grade.
Right.
Our view is looking at this as underground only. It goes straight into the highest grade material. That has the biggest impact on the economics. And so there's 3 or 3.5, if you call gold price a lever, key levers, 3 of which we control. And the first is the resource growth, which we just talked about. We'll have news flow throughout this year feeding a resource update in November. Secondly, there's been no underground mine plan. So we had to assume in our internal modelling just a constant grade across that life of mine.
Right.
We know that we can access higher grade material. It's already there and drilled off.
Right.
If we show that can be early in the mine life, huge impact to the economics. And then, so we'll do that work and show that in the middle of the year.
Right.
And then the metallurgy next. I think we can make improvements on the metallurgy. We've assumed a very conservative case by doing network focused on the high grade. We're optimistic about our ability to return that. That's very powerful as well. So as you said, if we can deliver each of those levers, we think we're targeting an NPV in that sort of 400 to 600 million range on a reduced CapEx from the NPV at maybe 150 million range, quite low given how much capital spent. And obviously that's a fantastic outcome if we can deliver that.
Yeah, I mean, 3.5 to 1 NPV to CapEx, you're not going to be running a mine. Somebody else will.
The great thing about Ana Paula, in my opinion, is it's going to be a mine. That we're just debating the scale of it right now. And there's actually not many projects you can say that with confidence. And so the other part that I like is the speed at which we can move. This is not 2 or 3 years of work. We'll have delivered every one of these steps in the next 6 months. And if we deliver, as you said, some of them or all of them, we're talking about a materially higher project value and therefore market cap this year.
Yeah. No, this is a great story. Charles is doing a great job here. He's got a really good team put together. And Ana Paula is one of those rare projects. You don't see this combination of grade and geometry very often. And if you find it, these are the kind of things that just print money once they go into production. I mean, it's a great, great project. So thanks for coming by, Charles. I know you've probably done 389 of these in the last 2 weeks, but thanks for sticking around and doing it with me.
Thank you. When you get results like this, it's fun to talk about.
Yeah, that's true.
Thank you.